The last trading day for Chinese stocks ahead of the Year of the Dragon. The mythical creature is traditionally considered to be the most auspicious animal in the Chinese zodiac, often associated with good fortune. But China enters the new year battered by months of economic uncertainty. Analysts have been weighing in on what the Year of the Dragon could bring to the world's second largest economy.
The question for this year is, are we going to see more support?
We're not really seeing any kind of stimulus package.
Proactive fiscal and also monetary policy.
But we've not seen that bazooka, that big bang taking place in China that, investors are hoping for.
I would expect more and more proactive fiscal and also monetary policy Chinese government will introduce after the Chinese New Year. So I don't really see so much downside at the moment, but obviously there's no momentum for rebound in the short term.
I think indirectly, the triple card is also one of the quite important signals showing that China is ready to provide more support to the economy, including monetary policy and including other policy as well.
There are some headwinds that the authorities need to tackle, and we haven't yet seen a concrete plan that could turn around the economy. And as long as we don't see that, I think investors will remain on the sideline.
I think investors are hoping for some kind of a floor in the property market. They're hoping for stability in the property market. We've not seen enough measures to provide support for the property market. We could see that happening in the coming months in the run-up to the NPC in March.
The Chinese property market is still in big trouble. Some of the big companies, including Evergrande, seriously in debt, and more may come. So this is the key thing that affecting the stock market itself.
We have a concentrated market with only about between 30 to 40% of the index constituents participating each time in any rally. So there is a lot of concentration risk. There is a lot of question marks about what can the regulators do to turn around the economy. It is also a problem for individual investors. Two of the ways to get wealth generation in China has always been either speculating in the stock market or the property market, and both of those have been down for quite some time now.
The hope for China is that the equity markets are extremely cheap at this juncture, but the risk is it's a value trap. And we need to see more measures from the government to provide support for the property market, which has been a critical driver behind the sell-off in Chinese stocks.
For this year, we should expect more proactive or even more expensive kind of the fiscal policy in terms of the higher budget deficit, in terms of the more spending. I think that will help to address the concern of this weak consumer confidence as well.